The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the pre-Thanksgiving holiday trade on Wednesday, we maybe had a little bit of the malaise in there already, but we saw kind of a firm day, mixed day in row crops, pressure though in soybean oil and in the wheat trade on Wednesday. Cattle found some more support as well. We've had tariff talk in the trade. We've had this screwworm issue in cattle. There's been plenty of little nuggets here throughout this holiday week to talk about. Joining us now to run through things and have a conversation, Mike Zuzolo with Global Commodity Analytics is with us here today on Market Talk. Mike, happy Thanksgiving to you and yours. Thanks for joining us. Hope you're doing well, my friend.
Doing very well, and a blessed and happy Thanksgiving to you and all the great listeners and viewers on Market Talk and Farm Media and AOA. Really enjoy working with you, and I feel very blessed to be able to work with you, Jesse, and have the opportunity to talk to you and all your listeners.
Well, that goes both ways, my friend. Always appreciate the time you give us and the insights you share with folks listening in, no doubt. Well, let's dive into this trade action as we wrapped up Wednesday. Of course, no markets Thursday, and then we'll have a shortened session on Friday with first notice day too. That could be a little interesting. But let's start. Let's look at the wheat market because we saw a fair amount of pressure kind of develop mid-session Wednesday in the wheat trade. So, and I know that could be a catalyst here for a lot of different things as we talk through this today, Mike. So let's just start in wheat. What exactly happened on Wednesday? What are you watching?
Yeah, as we go into the Thanksgiving holiday, we have to realize that we're now right on the edge because of the market being closed Thursday of jumping into Friday, which is both month end and first notice day for December futures. And I got to believe that had some noteworthy price action in terms of the hard red wheat. The hard red wheat was down 20 plus cents on Wednesday, Jesse. It did join other key commodities. Natural gas was down 7%, oats down 4.5%, soybean oil down 4.5%, hard red wheat down 4.2%. Either when I see those kind of percentage losses all grouped together like those last three, either there's something going on in the fund mindset, or maybe it's the December delivery and first notice day and having some longs trapped, or it has to do with the tariffs. And we don't know, but I would suspect that a lot of it has to do with the overall market. Why is hard red wheat only about 15 cents from its 24 low and its 4-year low, which are one and the same? And why did soft red wheat take a nosedive this week so far and now is only about 30 cents from its 24 low and its 4-year low? And I think it goes back to this chart we looked at last week, and it's the spot world wheat prices. We had talked about the issues that were brewing in Russia, the currencies. What we saw instead of rallying in the Russian wheat price is actually a decline in wheat prices. That dotted green line is the Russian price we're keeping track of, down to $225 a ton. I'm hearing that Ukraine was even cheaper than that, and that the Russians have really been taking more and more business away from Europe, especially. So more of the same, unfortunately, and that's really opening up the technicals in the wheat market, unfortunately.
Well, I want to look at SRW wheat versus corn. You got a monthly spread chart here, and corn was relatively firm on Wednesday while we saw this pressure in the wheat trade. But what's some of the correlation you're looking at here between SRW and corn?
Yeah, the inability of the lead month corn with December now getting ready to go into first notice day, and the Chicago price becomes the cash price essentially when we have the delivery period that we're starting now. And this is really important to me because we're just coming off those 1-year highs in cash corn at the Gulf of Mexico, and yet we're seeing the wheat market tank. And now the wheat is down to about $1.15, $1.16 premium to the corn, Dees. That puts it in feed grade territory, and that is not what we want to see for any extended period of time at all, because then all of a sudden we're going to start losing feed demand on the corn, I'm afraid. And so with that, it's really important that the wheat does turn this market around and kind of just stops going down when we come back on Friday or when we open back up on Sunday, Monday of next week, because the lower this wheat goes now, given the spread condensing so much, there's only so much the corn can do to fight a lower wheat market. And I think it's really running out of runway to be able to do that now that we're down below 120, 125. So that's the importance, both a fundamental mindset and also a fund mindset of the corn being pulled down by the wheat if we drop too much more.
I want to talk currencies here with you as well and weave this into the picture. And you brought up Russia, of course, a little bit ago, and that's been a lot of talk with the escalation of tensions, of course, between Russia and Ukraine, and how that situation is continuing. And you tie in some of the different currency moves on our side with the ruble, et cetera. So walk us through this chart. Looking at the ruble, dollar, SRW. What are you watching here?
Well, this is the problem in this market and has been for about 2 years, and that is the ruble continues to get slammed against the dollar. And with the updated President-elect Trump comments on his social media platform relating to the Chinese sanctions and the Mexico-Canada sanctions, I think the trade went back to the tariffs. The trade went back to the sanctions that we put in place on Russia, and it kind of doubled down, unfortunately, in the ruble dollar. And what we saw as a result was a brand new 32-month low now we're carrying this week in the ruble against the dollar. And you can almost see how that would just take the wind out of any potential buying or short covering rally opportunity in soft red wheat. And I think this is where, if for me, if we're going to get a turnaround in this market, the ruble is really the answer, because what we saw in Wednesday's trade, overall, the dollar index, it slid 1,000 points at one point during the trading day, and it actually is now negative on a weekly basis. But that's not against the ruble; it's actually still strengthening against the ruble. And I think this is where we got some relief from the tariff threats through the dollar index, but it's not translating into the ruble. And I think that's where, again, the wheat's got a real problem. But I will be watching to see if there is anything related to Canada, especially given that oat market, that soybean oil, and that hard red wheat market really standing out as the real weak links.
Well, and leaning in a little more here into the currencies, you mentioned the dollar. I know we hit highs last week that we've come off of those 2-year highs. We had a plethora of economic data, I know, come out Wednesday, personal consumption expenditures, durable goods orders, things of that nature ahead of the Thanksgiving holiday. Let's talk the treasuries, though. 10-year U.S. Treasury notes. This has been an interesting market to watch as of late, in my opinion. What are you seeing here, Mike?
This is, I don't want to overstate this, but to me, this is 30 to 40% of the potential for a commodity demand, commodity investment led buying mindset to develop, a psychology shift from what many are calling a cyclical bear market, and getting back on the horse of a major commodity super cycle type low that some were talking about 2 years ago and even last year. This is what's been holding us up, and that is the bond yields have been going higher. So when we're looking at this chart, you flip it upside down, and if the bond yields are going higher, then the treasuries are going lower. And so what we want this chart to do is to go higher and take the bond yields down. That then keeps the dollar under pressure. And I think there could have been quite a bit of liquidation here midweek in the dollar because the yields in the U.S. Treasuries are going down at this point, Jesse. Also, I wonder if the Middle Eastern ceasefire being passed yesterday maybe took some dollar safe haven positions off the table. But this chart we talked about last week, we wanted to go above this line and break through the resistance in the treasuries here in the 10-year notes. We did that, and we're doing that in a big way. And this is something to really watch, because does this encourage commodity investment? And then how does this square with the tariff threats? Which one's going to win? And what we're getting at here is between the dollar and the soft red wheat and the bonds, you can kind of see a pattern where they all could move in the right direction to stimulate a buy in what could be classified as one of the toughest ag markets that we've had in many, many years. We're not there yet, but it's worth watching.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk as we recap Wednesday's trade action. No markets Thursday and an abbreviated session on Friday. As we're getting to the end of the month here, Mike, let's take a look at the Bloomberg Commodity Index. I know we always like to take a look at this around the end of the month and just kind of correlating this across the board here at the grains. What are you watching? I look at this chart and see some pretty defined kind of formations here. What's going on with the Bloomberg Index this month?
Yeah, this grain index, we're really getting opened up to the downside. And this is what I was talking about a minute ago about opening ourselves up in the wheat market. And I don't think corn can withstand any more pressure, hardly at all, because we made a new 3-month low in this grain index. And we're going into the end of the month now of November, and soft red wheat and corn have only been up 4 months in the last 11. If we finish where we're at right now, soybeans up 3 months in the last 11. That's really showing up in this chart because we're now opening ourselves up to the downside if we lose that white dotted support line. And that takes us all the way back to the August lows in where the number 6 is. That should have been a cycle low. Are we going to change that and not make that a cycle low because of this President Trump's updates and the tariff threats that we're under right now? So the charts are really speaking volumes to us right now, Jesse, about the macro fundamentals. And that's why I wanted to introduce that currency bond market. If something could turn this wedge, that white triangle formation, to the upside and we break higher, my bet would be that it's going to be led by the bonds and the dollar index.
Let's talk seasonality and corn here too a little bit. This is a Dees corn seasonal chart that you shared with us here. And just with first notice day coming up, I know that this can lend itself to some added volatility in a thin holiday week, especially on Friday, et cetera. So, I mean, talk about that and just what you're seeing with seasonality right now in Dees corn.
Yeah, you notice the last 3 years, we're nowhere near. I mean, we're kind of in the same pattern or similar pattern as 2024 if you look at the price action, but we're so far away from the actual price level in 2024 right now. We really don't have a good leg to stand on of looking at the last 3 years. The best one that I can see in the last 5 years is really 2021. We're going in the opposite direction. It was rallying at this point in time during the month of November and peaked in the 1st of December and then went up another leg as we went through into January. But as far as price action, our 2025 Dees corn is moving towards 2021 levels. And this is where if we do have a bad front end delivery process, wheat doesn't bottom, I could see that 2025 corn getting back down towards where we were at this stage of the game in 2021. So I really like these seasonal charts because it kind of gives you a good idea of whether you're carrying a premium or not based upon the last 3 to 5 years.
All right. I want to ask you in soybeans too, just as we closed out Wednesday's session, a little bit firm in beans and meal. It looked like some meal oil spread action, though, was happening on Wednesday. Your thoughts in that soy complex overall, Mike?
Yeah, I agree. I think the meal came in at the expense of the oil, and the beans had to play it in between the two. But the meal's the key. We talked about that meal needed to make a major low. It fought off 4-year lows again this week. Let's hope it holds. Again, it goes back to first notice day, and I think there's quite a bit of open interest in these December contracts. I haven't checked recently, like in the last couple of weeks, but there have been a lot more contracts open interest than I'm used to seeing in some of these markets at this point, Jesse.
Yeah, it's going to be an interesting thing to watch, especially through Friday and then getting into next week. I want to talk livestock with you, and I'll pull up our final chart on the video feed. We can start there. And this is a chart looking at pork against the cutout price versus cash cattle. And it was kind of a mixed day, I guess I would say, on Wednesday amid various news items, particularly the screwworm issue we've been following this week. And we'll get to that in a second. But when you look at this comparison on this chart, what's something you're watching here as we head into the holiday?
Well, the one thing that we can talk about, and it's been a very strong pattern, is that the hogs and the pork cutout have really held up well and supported very nicely the cattle market and the beef market. And we can see that in this chart, especially since the later part of 2023. They've really worked well with one another. What I'm concerned about is hogs especially. You know, we still have the funds, managed money, record net longs in hogs. We see this cutout giving way pretty dramatically this week, and all of the cutouts have been down, hams as well as bellies for the most part. And with this price action where the soybeans have been going lower, the crude oil's been going lower, the copper's been going lower, all of the China sensitive markets that I follow have been going lower except the hogs. And so when I saw this cutout chart, I wanted to just give a big heads up and kind of shoot a flare that the hog market could be ripe for some pretty big long liquidation at this stage of the game. So be on the lookout for that, especially after the Thanksgiving holiday. This goes back to the negotiated cash price in orange. If we don't have that as a supportive feature in the pork side of the equation, what do we have in the negotiated cash cattle price to support us other than the feeders and the screwworm issue and also Wall Street? And so we're kind of narrowing down those pieces of the puzzle that feed the bull. The cattle and feed report, you could argue, fed the bull on marketings, but it did not feed the bull on feed numbers because the placements were so big. And at 12 million head on feed, I would say it actually fed the bear when it came to feeder cattle in particular.
Well, I do want to lean in a little more on the screwworm issue with you, and I'll just, for reference, I'll pull up the story we had on the American Ag website. Just again, kind of looking at this, APHIS, of course, notified last week, and we stopped the importation of animal commodities, is what they said, with the footnote of live cattle and bison, and feeders have been impacted by this whole situation, of course. I mean, talk about this screwworm issue a little bit, Mike. Just your general thoughts on what we're seeing here, and could this continue to be supportive to the cattle markets?
Yeah, the ranchers that I've spoken with this week have really not been around the screwworm issue. And so very few of them had a lot of feedback to give me from what it meant to them. Well, I did talk to, I'll say, a political person in the know, and his mindset was that it was not going to be an issue maybe as early as next week, as far as when that border could be opened back up again and APHIS rejects, or I guess backs away from their border closure because of the situation. And so I don't know if that's true, and he's obviously guessing at this point, but the sense that I have is that we never traded the negative on feed and placement numbers after the cattle on feed report. Friday is a week from that report. If we do get any kind of news where the border opens back up, does that open the feeders up to the downside, even though we've got the cash prices that are still on fire right now? So that it's a really tough situation, but I can say that the fat cattle market getting close to 190 in the front end seems very rich to me if they don't have hogs and Wall Street on their side, even if the feeders keep going up.
Definitely. I should ask you energies here as we get ready to close out the show today. Crude was pretty range bound on Wednesday. I'm wondering if maybe some of the peace talks there, the ceasefire in the Middle East, and maybe having an impact in crude. I'm not sure. Anything you're watching in the energy markets here nearing the end of the month?
Yeah, I'm very glad you brought that up, because we talked about the treasuries and the dollar and the wheat, and that maybe being the bright spot in this market if there's going to be one. Crude oil is right there in the center of that. And I'll tell you why, Jesse. If President Trump follows through with the Canadian import increases on tariffs and that includes energy, and that's what he's suggesting this week, and then the new Trump administration comes in and shuts down Iranian oil, I can't see how that can't support oil prices, especially if OPEC Plus keeps their production level unchanged and they don't increase their supplies. And so I think the crude oil market really is an important market as we get into 2025 because of these tariffs. It may be the one maybe serious inflationary market that we have as a result of these tariffs, even with the drill baby drill, because we're taking so much foreign oil off the market in terms of what people can trade here in the domestic market especially.
Great stuff as always, Mike. Final thoughts, anything across the grain, livestock trade, et cetera, you want folks to think about here as we head into the end of the month?
I'd like to see exports pick up again when we come back from the holiday, Jesse. It does, the lack of exports. We had a small export to China on soybeans on Wednesday. That was very welcome, but it kind of leads me to think that these recent purchases were indeed due to getting ahead of the President Trump victory. So I'd really like to see some more exports show up here as we come back next week.
Mike, if folks want to reach out for a conversation, take a look at your analysis and more, I know they can do it very easily online. How can folks get in touch?
Yeah, please do. This is a great time to do it. Globalcomresearch.com, and it's globalcom with two M's, research.com. There's a way to sign up for a free 2-week trial there.
Mike Zuzolo, Global Commodity Analytics. Always a pleasure. Happy Thanksgiving to you and yours, sir. Thanks for joining us, and we will talk to you next week in the month of December.
We are all very blessed, even in these markets, Jesse. Thanks so much.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.